This is a highly requested video, family. A lot of you guys have been asking me to do a video about imbalances, and of course it's the very same thing as fair value gaps or insufficient price movement. And of course I'll be showing you on how to identify that on your chart. And of course, within this whole video, I'll also show you on how you can use them to your advantage. I'm gonna explain it with the most simplest way, even for a beginner or an intermediate trader. So make sure to watch the video till the end to get blessed and get so much value in your trading life. Okay, family, I just want to let you understand this concept, so we're going to go straight into the charts. So before we can start, I need you to understand something. When it comes to smart money or institutional trading, they will need to do two things, right? As we can see, the trend is down. They'll need to do two things before they would sell in within this whole trend. They'll need to either manipulate the market in order to sell, so they will need to create liquidity to sell the market, or they'll need to create an impulse that will create an insufficient price that will later fill it in order to sell the market. So they need to get filled in. And of course, this idea is spoken, famously known by David Pott. He talks about trading at the institutional level, right? So I was able to understand that mentality in order to get this. Now, the best way, let's go into it right now. The best way to understand this, I'm going to start with a bearish market. So as a market turns around or reverses, okay, you want to identify where price now gives you long bearish candlesticks. So in this case, as we can see, these are the bearish candlesticks that we get in. Okay, now what you want to do when you identify that, you want to basically take the close of the previous candle. Okay, I'm going to just take my horizontal. You're going to take the close of that previous candle, trade across. As you can see, there we go. The market broke because that's when we still had buyers in the market, lower in buyers. So they manipulate the market, sell the market. And of course, once it did that, they sold it so fast that it created insufficient price. And of course, what you want to do at the close of, or rather at the opening of the next candle or at the high of the next candle, what you want to do is that you want to also mark it. Okay, and of course, what the market will do, essentially, this is one of the ways you can enter your trades. What the market will do when it pulls back, it will pull back into the impulse. It creates a pullback, creates an impulse. Whenever the market will come back, it will come back into that fair value gap to fill it up in order to create another impulse, to catch that impulse for yourself. So that's what I'm talking about right here. And the best way to do that, again, I'm going to do this for you, is you want to take a Fibonacci. Okay, so we're going to take our Fibonacci here. I've already customized it on my side. You want to take that Fibonacci and you're going to do the very same thing you were to do with your horizontal lines. Okay, you can do exactly that. In this case, we have two imbalances. We have long candles that I have created. So I'm going to take both of that. Okay, and as we can see, I took it from that low and I took it from this high of this candle, and as you can see, and sell to create an impulse. Okay, if that is a little bit confusing for you, let's go again right here. So after we have that pullback or correction, we have the market selling again so hard. So smart, again, you want to take the close of that buy candle right there. Okay, and of course you want to take the opening of this candle after the long institutional candle. And of course, when you stretch it across, you will see always that the market will want to react to the 50%. So I'm just going to take this candle over here. You will see whenever the market turns around, it turns out at 50%. So how you would trade this, of course, I'm just using this example on the daily time frame. So don't pay attention to the stop loss, just the concept you wish. And as you can see, this is how this trade could have played out, or even in fact, this trade right here when it came back into the 50%. Okay, so I want to move it and we will definitely see what I'm talking about right here. Okay, and exactly at 50%, this one turned around, and as you can see, that was amazing pips that one could have gone. So in a nutshell, you want to identify insufficient, and it's normally, and I just want to show you what actually caused this reversal or this impulse, because from a daily time frame, this is an impulse right here. So if you want to catch it again, look at it. Okay, we have over there insufficient price that was created after a pullback. You can see, okay, I'm going to mark it for you. You can see the market set, impulse, pullback, impulse. Of course, it does this whole deep pullback into the market. And when it gives us that deep pullback, what it simply means is that we're going to sell longer. That's something that I tell my mentorship students, right? Okay, so you want to mark it again, the low of that candle, once we have that institutional candle, and of course the high of the candle. So I want to stretch it across, as you can see, exactly at 50%. Look at what happens. The market gets to sell. This whole impulse was created because of the market filled in an imbalance that they wanted to fill. And of course, they also did take some liquidity in the markets. So they took that liquidity. Now we're actually getting to lay out the whole smart money concept. Of course, that's what I'm going to do in the next video, because I've covered change of character, I've covered supply and demand, I've covered imbalances right now, and I've also covered break of structure and liquidity, how to identify that. So if you don't know, go and watch the whole playlist. It will give you an overview on how to start trading smart money. And we can definitely see what was happening right there. We had this and they took that liquidity. That's why right here, this was also filling, which was another chance to actually sell the market. Okay, as you can see, that was another chance that they wanted to sell the market. Let me just bring that closer. Okay, and of course we had another point where they also sold the market. That is in a bearish trend, and I want to show you the next example in a bullish market. Please make sure to stick around. I see a lot of you, once I cover it, you jump off the video, then the next thing you'll be commenting the very same thing I was covering within the next section. Please do stick around in order to get the concept fully. Okay, so I just want to take you to the simple price of action right here. And of course, already we are buying because the market has touched supply. At demand level, if you don't know what I'm talking about, supply and demand, I did create a video. So already it's going up, it's creating an impulse because we have a demand level that it has already hit. Now, look at what happens again. We have an institutional, so we have a long candle that comes in. Each and every time when you simply see a long candle, you know it's about to go. The trend is bullish, and therefore I will show you right now. So you want to take your Fibonacci. Please make sure you customize it on your side. There we go. You take it from the low of that candle, or rather from the closing of that candle all the way to the new candle above that institutional candle. So the low of that, there we go. And as you can see, we have our 50% or right. We want to be buying right here. Okay, when it comes in, it needs to come in all the way there. So I'm going to play it back and you will see what I'm talking about. As you can see, it gives an entry right there, or it starts to reject there. Okay, so right at the 50%, the market starts to buy, and we can see it filled in a fair value gap. And look at that. I want to show you as I play. Look at that. Beautiful, right? Those were amazing pips that only came out of this fair value gap. I don't want to do a lot of examples on the buy, but you can go ahead go and imitate what I'm doing. Practice, go and identify it on the chart. That's how you're going to learn. Watching this video is only going to get you knowledge, but if you go ahead and apply what I've taught you, it's going to turn this knowledge I'm teaching you into skill. So in a nutshell, you always want to look for, of course, a trend. Trade with the trend. It's very simple. Trade with the trend. And of course, when the market comes in, if there was an institutional or a bullish candle, anything, you want to mark, of course, let's say that was the actual candle right here. You want to mark this area, and you also want to mark the next candle that it creates. You will see the market will come back into 50% and sell. And of course, that's the very same thing when it comes into a downtrend. If there was a long candle over here, so let me just create it like this. Okay, and the market, of course, now we are going ahead. We're going to take the low of that. Okay. Let me just create it for you. We're going to take the low of that. We're going to take, of course, the closing of that. The market is going to come back into the 50% and sell. Okay, I hope you understand the concept, guys. Please go ahead and apply this into your day-to-day chart. And of course, you're only going to get better with practice of identifying it more to either get used to it and integrate it into your own trading strategy. By the way, guys, if you have not yet subscribed, if you're watching till now, make sure you do so, because we are the channel that provides trading education such as smart money concept and of course trading psychology as well as self-development. God bless you guys. See you on the next video.